Hi, this is James Shug with Westpac London's end of day report for Wednesday, the 3rd of July. Well, it was a pretty significant down day, particularly on European markets today. Lots of economic data was released, concerns about the situation in Portugal, in Egypt as well, concerns about the oil price, all having an impact, ratings downgrades of various banks also coming into play. I'll run through the stories just quickly. Start with the economic data. We had in the US the non-manufacturing ISM survey for June. It dipped to 52.2. That's its lowest since the early days of the recovery, nearly 4 years ago. So this is repeating downtrends that we've seen in the middle of the year for this series in earlier years, and it shows the dangers associated with extrapolating apparent strength in the US economy in the early part of the year, extrapolating that out as if it can last forever, as some Fed officials seem to have been doing of late. So that was a disappointing result. In contrast, the ADP private payrolls survey found 188,000 jobs in June. That was stronger than expected, but still leaves in place a slowdown in employment on that measure, from an average of 176,000 in the first quarter of this year to 145,000 in the second quarter. Still in the labour market, we had a slight fall in initial jobless claims, a measure of the pace at which people are being laid off, but that wasn't enough to restore the downtrend in claims that seemed to have emerged between January and May of this year. The trade deficit in the US widened by almost $5 billion in May. When you adjust for prices, there's still quite a widening that took place, and that suggests that net exports will remain a drag on the GDP bottom line for the second quarter, as they were in the first quarter. In Europe, we saw the composite PMI, that's the composite factory and services PMI for June, revised down a couple of points, from 48.9 to 48.7. That actually reflected a downward revision to the German services PMI. What we're now basically seeing is a less contraction in the French PMIs, but PMIs for Germany that essentially suggest the German economy may have stalled in the second quarter. Remember, it only grew 0.1% in the first quarter, so the combination of a stalled German economy, if that's the case, a contracting French economy and weakness ongoing in countries like Spain, Portugal and Italy suggests that the second quarter will be the 7th consecutive quarter of decline in Eurozone economic output. We don't get figures on that though till middle of August. In contrast, the services PMI in the UK was strong. Hit a third highest reading of the 4-year recovery we've seen to date. However, shop price inflation was reported at its lowest since 2007. So very low inflation outside of a few special factors that are lifting the headline inflation rate in the UK, but shop prices certainly fairly soft. So that was the main data. As I mentioned, we saw Deutsche Bank, Barclays and Credit Suisse lose a ratings notch from one of the agencies today, citing a range of concerns, including the new regulatory requirements associated with Basel III. Airlines were marked down because of the higher oil price. The Portuguese coalition government looks like it's about to splinter. Prime Minister Pedro Coelho, he lost his finance minister and his foreign minister, amongst others, and the concern for markets now, of course, is that if the government falls, there may have to be an early election, and early elections or elections in Europe generate anti-austerity votes. We saw that in France when Sarkozy got kicked out. We saw it in Greece we saw it in Greece last year when we had all that fuss, and in Italy in February of this year. So the concern is that if Portugal votes in an anti-austerity government, the ability of the European Central Bank to support the bond market in Portugal might be diminished, because you wouldn't get the government there agreeing to the sort of conditions that the ECB and the European Stability Mechanism might require. Portuguese 10-year bond yields rose about 1.5% today, and they're now just around 8%. The Portuguese bailout loans worth about 70 odd billion euros. They're only paying 3.2% for them. So clearly, the Portuguese exit, if you like, from the bailout, which is currently scheduled for the middle of next year, just simply couldn't happen if bond yields hold at these higher levels. So that's something that I'm sure Mario Draghi will be quizzed about at tomorrow's ECB meeting. Also tomorrow we get the first meeting for the Bank of England under Mark Carney. It's a holiday in the US tomorrow though. So given all of that, the FTSE in London just ahead of the close, down 1.6%, the French market down 1.4%, the German market off 1.4%, Spain down 2%, and the Italian market down 0.75%. The Dow has had a sell-off. It's rallied back. It's actually pretty much unchanged as I speak, but I suspect there's plenty of potential for it to bounce around a bit more later today ahead of the holiday tomorrow. In commodity markets, copper prices are up 0.6%, gold's up 0.9% at $1,254 an ounce, and oil prices are up 2% at $101.60 a barrel. So over $100 again. And as I say, airline share prices in particular have been marked down. The Aussie dollar, it's at 90.6 US cents at the moment. That's a new low pretty much for the Aussie. Well, today we saw a new low for the Aussie for pretty much 3 years. One factor that triggered it was reports that Glenn Stevens in a speech said that the Reserve Bank had deliberated long and hard at this week's meeting. And that was taken by some as a sign that there was actually a very close call. It was a very close call in terms of should they cut rates or not. It's subsequently been reported in the press that he may have just been making a quip. Nevertheless, markets reacted to it being reported as if it was some factual observation of how the meeting went. So anyone who was at the dinner, drop us an email to let us know if he was joking or not with that opening remark about the long and hard deliberation. So the Aussie's down at the moment. Weaker retail sales figures yesterday as well contributed to that. All right, I'll be back again same time tomorrow.